and welcome to our class on ADX, Average Directional Index, one of the up-and-coming but well-known forex, CFD, cryptocurrency technical indicators. The Average Directional Index. ADX is part of the directional movement system developed by J. Wells Wilder, but can be successfully used on its own to signal trend changes and to indicate whether a stock is or an asset is trending or ranging. Now, our next class will completely follow the DMI, or the directional movement system. But today we're going to talk about ADX and the three lines that we use for the ADX system. Now, the ADX indicator is a popular trend indicator, and it provides information about momentum and trend strength. In this class, we will dissect the individual components of ADX and explore the step-by-step how to use them to make sense of charts and finding trading opportunities. As you will probably know, the ADX indicator comes with three lines. The general ADX line. Then we have two DI lines. And we're going to go over this, so I'm not expecting you to know all this. We will first look at the ADX line. Essentially, the ADX line measures trend strength, and the rising ADX means that the strength or the trend is gaining strength. A falling ADX shows a trend that is losing momentum or reversing, and a flat ADX shows a sideways range. What is also important to know is that the ADX is non-directional, which means that it does not give any information about the direction of the trend, just the strength. So when the ADX goes up, it means that the trend is gaining strength, whether it's an uptrend or a downtrend. You have to look at the trend to see which way it's going. This can then signal both bullish or bearish trend. Now, the two screenshots we're going to look at will show you this nicely, and you'll see ADX rise both during the uptrend and the downtrend. Finally, we must talk about the threshold level of ADX. As you'll see when we look at the screenshot in a second, we've plotted a vertical line at the ADX window at the 20 level. The 20 level acts as a tiebreaker. If the ADX is below the 20 level, price is in a range, or it is very weak trend, and only when the ADX breaks above 20 level does it signal any strong trend that is likely to continue. So as we can see here, we have our, let me get my highlighter on here. We have our 20 line here. Now on this we have three lines. We have our ADX plus our two DMIs. But we can see the 20 line and how important being above the 20 line, because when the price isn't above the 20 line, the strength doesn't have any strength or momentum. As we can see here, we're right at the 20 line, and as things start to move up, we see price starting to move in a trend. As price was above the 20 line, we had a very strong moving downtrend. Came down here, so what we're seeing is as it approaches the 20 line, as it's moving downward, the trend is losing strength. We have to look at the trend to determine which direction it is moving. Now, when you see them all clustered on 20, what do we have? We have a range-bound asset. But here, what did we see? We saw a gain way above 20 in the ADX line, and we saw a strong downtrend movement as it gained more and more strength moving above the 20 line. So the second part of the ADX indicators are the two DI lines, which are usually color-coded red and green in our example. So the red and green lines here, let me get my marker back on here. This line and this line are the DI lines. This line is our ADX line. Okay. So we just talked about ADX, and the two other lines are the directional index. So we need the three of these to actually make sense of the product. The DI lines provide directional information, and they also measure the strength of the trend. Before we get into chart analysis, it's important to understand how those green and red DI graphs are calculated. But don't worry, we'll keep it simple, and you'll never have to calculate them, but you should understand them. The only thing you should remember is that the DI lines compare the absolute candle heights and the absolute candle lows. So here are a few scenarios. The green DI rises. That means the high and the low are higher than on the previous candle. The red DI rises. That means that the high and the low are lower than the previous candle. For an inside bar, the DI is at 0 because both the high and the low fall into the previous candle and have no direction. So on the screenshot we're about to see, we're going to set the DI period setting to 1, which means that the indicator just compares the two most recent candles. So the DI setting is important. Is how many look back time frames do we want it to compare. This is a good way to understand the DI calculations quickly. Keep in mind that DI just looks at the absolute high and the absolute low, not the body of the candle and not the wicks. The high and the low. Doesn't care about the open and the close. So it's the absolute highest point to the absolute lowest point of that candle, and then the next candle, or if you're looking at a bar, the highest and the lowest of the next. So as we can see here, the DI lines, and now what we've done is we dropped the DI lines onto a pie chart, not a pie chart, a histograph. Okay, so we can see here that the DI line was green, Y, high and low, and it was very high, and we see a strong bullish bar that caused the green DI line to be a plus. Okay, over here we see a DI line that's negative. Here we see a strong bearish DI line. Okay, remember, the DI lines are only the comparison between the high and the low of, in this case, we're looking at one time frame. So there's a DMI +1 or -1. Okay. Now, the DI crossover signal. When the DI lines cross each other, they give a signal. When the green line crosses the red line, it means that the highs and the lows of the previous candles are both moving higher, which confirms an uptrend. When the red DI line crosses above the green DI line, it shows that over the past candles, price has been moving down and the lows and the highs are getting lower. And what's the definition of a downtrend? Lower lows, lower highs. So in this coming screenshot, we'll be able to see nicely, first the ADX line crosses above the 20. But at the same point, price was in a range. So you can see that the first ADX cross didn't provide a strong signal, but on the second one, when the ADX started pointing upward and the DI lines crossed simultaneously, it signaled a strong uptrend. So remember, you can use the ADX line by itself, and it shows you the momentum of that trend or the strength of that trend. But when you combine it with the DI lines, then we get some real information. So what you're seeing here is you're seeing the crossover. Let me get my right here, and you're seeing a rising ADX line. When the ADX, remember, is above 20 and moving upward, tells us that we have a strength that's gaining. When the red DX and the green DX cross with the red going down, tells us we have a strong uptrend brewing. Oh, let me get my marker off here. There we go. So let's connect all the dots. So we're going to look at two markets and explore how the ADX indicator can help you make sense out of these charts. In the Australian dollar and New Zealand dollar chart, there were 5 ADX signals, and we marked each of them with a vertical line. See the 5 vertical lines on the right hand side? Okay. We also put the arrows for whether they crossed in a up or down signal, a buy or a sell. Okay. So we see the 2 DMI lines crossing. Here, 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 and lastly here and here. Okay, now just the lines crossing starts to give a signal, but we must see the ADX line above that 20 and moving upward or moving downward. We see it moving downward, tells us the trend is losing strength. Moving upward tells us the strength, we're gaining strength. So right here, it told us something. Right here, here it gave us a buy. Here it gave us a sell. Here it gave us a buy. Here it gave us a sell. Here it gave us a buy. Now keep in mind, the ADX and the DMI only tell you strength. They don't tell you how far the asset might move. Now here we see it again. Okay, now we're going to look at a different chart for the New Zealand dollar, US dollar, and we're going to see 6 different signals, and we'll go through them one by one. The number one, relatively early long entry into a decent rally. Once the ADX hooked and turned down, price also started to reverse. The ADX hook is a good exit signal. Okay, so you can see this is the first place we entered, and we would enter a long position. When the ADX hooked here, that was a warning that we might want to get out of the market. Okay. Again, we got an early warning signal of an upcoming downtrend. And we see the ADX going over and under and over and under. Okay. But here's the new ADX hook, and it told us to get out. Okay. We get now a buy signal with the crossover as the ADX is rising. Here we get another buy signal. Here we get a sell signal. ADX fell but stayed above 20 and then turned upward. That's telling us this trend has momentum. We had the crossover of the red and the green DMI line, and we're just looking for an entry point. So as you can see, the ADX indicator, just like any other indicator, does not provide 100% accurate signals, but a trader who finds a way to maximize the profitable opportunities while managing the failed signals can probably make good use of the ADX indicator. So let's recap what we've learned. The ADX indicator has 3 graphs, the ADX line and 2 DI lines. The ADX indicator is a trend and momentum indicator. The ADX line measures trend strength but does not provide information about direction. Once the ADX line crosses above 20, it signals a growing strength or a strong trend. The 2 DI lines analyze bullish and bearish candles. The DI lines compare the absolute high and the lows. When the DI line crosses, it gives us a signal. When the DI line is above the red line, it signals that the market is trending upward. Now, I did mention that we had set for the example the DI lines at 1 period. I don't ever use 1 period. I'm a guy who likes tens. So I always set my moving averages at 10. I set my DIs at 10. But I'm looking at that on a 15-minute chart. If I'm looking at a 1-hour chart, I may set it down to 4 or 5. I want to go back recently and look back, but I don't. It's too sensitive for 1 period. So you can see everything that we've discussed and everything we learned right here on the charts. So that's all, folks. Thank you. And we're going to be discussing the directional movement system developed by Wells in our next class. So have a great trading day, and thanks for spending time with us. And please subscribe to our YouTube channel. Bye now.